Sky-high gas prices means oil companies are in the spotlight now more than ever. Exxon, Shell, BP, and Marathon dominate the energy market. But before there were those four majors, there was just one, Standard Oil. Jared Blikre joins us with a new edition of Then and Now. Well, look at those great Gatsby-like graphics. We're going to turn the clock all the way back to the turn of the century. And Jared, you don't have to do your old-timey 1910s accent.
Oh,
Tell us about what you're looking at.
What does a 1910 accent sound like?
You know,
old-timey?
That was the worst accent.
Right, I'm going to get a top hat, just like J.P. Morgan himself. We're not going to talk about J.P. Morgan. We're here to talk about someone else. That's right, 1911 to be precise. That's because the dominant oil companies of today can trace back their roots to a titan of the early 1900s, John D. Rockefeller's own Standard Oil. And Rockefeller founded the company in 1863, the true wildcat days of what would become known as black gold. And by 1904, Standard Oil controlled 91% of the oil market and 85% of final sales. Can anybody say monopoly? Through a web of acquisitions, Standard Oil Trust eventually would govern around 40 corporations in total, with 14 being owned by Standard Oil completely. Standard Oil also holds the title of being the first billion-dollar company in history, with Rockefeller's own fortune eventually reaching $900 million. Guess what? Today, that would be around $24.7 billion. That's right, Elon Musk would still be richer than John D. Rockefeller. But despite it being the biggest company in the world, at its height, Standard Oil was never listed on the New York Stock Exchange. Shares were only ever traded over the counter or on the New York curb. Unfortunately for John D. Rockefeller, Standard Oil never got to see the automobile boom of the 1920s. The U.S. government stepped in and forced the company to break up in 1911 under the Sherman Antitrust Act. And here's how that shook out. Standard Oil was split into 34 separate companies, and those included Standard Oil of New Jersey, New York, Ohio, Indiana, California, and Kentucky. As you can see here, through a series of mergers and acquisitions, those companies eventually combined into the four major oil companies we have today. And Brian, that is ExxonMobil, BP, Marathon, and Chevron. So here's how the descendants of Standard Oil are trading today. Look at this green on the screen.
That's a lot of green.
Yeah,
that's
Exxon.
A lot of green.
I mean, the original, the OG.
Yeah,
that's
the OG, if you will. Yeah.
Well, let's take a 20-year view, because we can see Exxon was actually, it's right back up to its highs, which we had in 2014. You go to a max chart. Now, Exxon used to be one of the biggest companies in the world. Apple took that over in 2013.
1,400% higher. That's kind of hard to process.
All you had to do was
here.
invest in 1987, I think.
What are the other, so as you mentioned, it was kind of fragmented into a number of other companies as well. So is Exxon the best of them, or
the best? I mean, they're up 62%. Maybe that's the best. We have Chevron here too. This is a max chart. You can see it broke to record highs. Exxon's still trying to do that, I believe. I don't think it's gotten quite there yet. We also have Shell. That's up 37% this year alone. And you can see it's been going, it's pretty much been trading sideways for the last 25 years. Finally, do want to take a look at BP, British Petroleum, and that has been trending down. So a lot of these companies just kind of still trending down. We can look at another one. This is not one of the majors, but this is Warren Buffett's favorite oil company, I think. That is up 395%, just reclaiming the territory it lost about 10 years ago.
Right. You know what I was going for earlier? I was going for like that, that pre-19 Roaring 20s type of accent.
Okay.
Why I oughta,
Oh, Great Gatsby.
I love the great. Old Sport, with the newspaper caps.
You got it. I was going to say Old Sport, but you beat me to the punch.
We don't do impressions here on Yahoo Finance.
I do them terribly, so that's why I don't do them.
We'll stick with that for at least right now. Coming up.